This Week in Finance, your go-to weekly recap where we aggregate Bloomberg, CNBC, Reuters, The Wall Street Journal, BBC, and other major outlets into one clear, unbiased place. We break down how global news moves markets and give you actionable insights to stay ahead. This week covered March 14th through March 20th, 2026, and it was a week packed with geopolitical tension, central bank signals, and sector rotations that every investor needs to understand before the bell rings on Monday, March 23rd. Before we dive in, a quick but important note. Everything you hear and see in this video is strictly for educational and entertainment purposes only. We are not financial advisors. Nothing presented here constitutes personalized investment advice of any kind. Investing involves significant risk of loss, and market conditions can change rapidly and without warning. Always do your own research, verify facts independently, and consult a licensed financial professional before making any investment decisions. Past performance does not guarantee future results. Now, with that clearly stated, let us get into the recap. This is your deep dive recap of the March 14th through March 20th trading week. A thorough sector-by-sector breakdown of what moved markets, why it happened, and what it means for next week starting March 23rd. Markets were anything but quiet, from crude oil spiking on fresh geopolitical flashpoints to the Federal Reserve holding rates steady and sending mixed signals to growth investors. There was no shortage of catalysts. Let us start where the biggest headlines were born. The energy sector. Either way, energy remains the sector with the clearest near-term catalyst. Crude oil prices surged sharply mid-week after escalating tensions between the United States and Iran raised serious concerns about potential disruptions to Persian Gulf shipping lanes, a corridor responsible for roughly 20% of global oil supply. West Texas Intermediate climbed above $88 per barrel at its peak, while Brent crude briefly touched $91, levels not seen in several months. The market reacted swiftly and decisively. ExxonMobil, ticker XOM, gained over 4% across the week, buoyed by both rising crude prices and strong refining margins. Chevron, ticker CVX, followed closely, adding approximately 3.2% as investors piled into integrated majors. On the exploration and production side, Devon Energy, ticker DVN, was a notable outperformer, surging nearly 6% as smaller E&P names tend to carry higher leverage to crude price movements. Looking ahead to next week, watch whether diplomatic channels cool the Iran situation. The Federal Reserve held rates steady at its March meeting, maintaining the federal funds rate in its current target range. While this was broadly expected, the tone of the accompanying statement and chair commentary leaned more cautious than markets had hoped. The Fed signaled that rate cuts remain on the table for later in 2026, but emphasized that inflation data must show sustained progress before any easing begins. For financials, this created a mixed picture. Net interest margins remain healthy for large banks, but the longer rates stay elevated, the more pressure builds on loan demand and credit quality. JP Morgan Chase, ticker JPM, ended the week relatively flat, down about 0.4% as investors digested the rate hold news. Bank of America, ticker BAC, slipped just over 1% amid concerns about commercial real estate exposure resurfacing in analyst commentary. However, Goldman Sachs, ticker GS, bucked the trend, gaining 1.8% after strong investment banking pipeline data was cited in a mid-week analyst upgrade. Heading into next week, watch for any Fed speakers scheduled to appear. Their language around the timing of cuts will be the key variable for financials. A more dovish tone could lift the sector meaningfully. If yields continue climbing on energy-driven inflation fears, expect continued choppiness in the sector. The sector started under pressure as rising oil prices and the Fed's cautious tone pushed the 10-year Treasury yield higher, which historically compresses valuations for long-duration growth assets. However, by Thursday and Friday, buyers returned, particularly in artificial intelligence-adjacent names. NVIDIA, ticker NVDA, pulled back sharply early in the week, dropping nearly 3% on Tuesday alone, before recovering to close the week down just under 1%. The volatility reflected broader uncertainty, but institutional accumulation on dips remained visible in the options flow. Microsoft, ticker MSFT, was a relative standout, gaining 1.5% after a positive analyst note highlighted its Azure cloud growth trajectory and expanding AI integration across enterprise clients. Meta Platforms, ticker META, also gained ground, up roughly 2.2%, driven by strong advertising revenue signals from a third-party data firm. For next week, defensives could continue to attract flows if geopolitical headlines remain elevated, as a portion of institutional money rotated towards safety amid geopolitical uncertainty and rate ambiguity. Utilities saw renewed interest, with the sector gaining approximately 1.6% on average. NextEra Energy, ticker NEE, was a standout, climbing 2.4% as investors priced in its long-term renewable energy contracts as a hedge against macro volatility. In consumer staples, Procter & Gamble, ticker PG, added 1.1%, continuing its steady climb as a classic flight-to-quality trade. The company's pricing power and global diversification make it a perennial safe haven when uncertainty spikes. Healthcare was similarly firm. United Health Group, ticker UNH, gained 1.7% after a favorable regulatory update related to Medicare Advantage reimbursement rates circulated through industry channels. Industrials had a solid week, largely driven by the same geopolitical backdrop that lifted energy. Defense contractors were among the strongest performers in the broader industrial space. Lockheed Martin, ticker LMT, gained 3.1% as investors anticipated potential increases in defense spending discussions tied to Middle East tensions. Raytheon Technologies, ticker RTX, added 2.6% for similar reasons. On the materials side, copper prices ticked higher on supply concerns and continued demand signals from China's manufacturing sector. Freeport-McMoRan, ticker FCX, gained 2% on the week, reflecting both the copper move and broader commodity strength. Caterpillar, ticker CAT, was a more modest gainer at around 1%, supported by infrastructure spending data out of the United States that showed continued project activity. For next week, industrials tied to defense and infrastructure look well positioned. Materials names will depend heavily on whether China's demand signals continue to strengthen. Worth monitoring as a potential diversification play heading into late March, as investors sought traditional safe haven assets amid Iran tensions and dollar uncertainty. The SPDR Gold Shares ETF, ticker GLD, gained 2.3%, and gold mining stocks broadly outperformed. Newmont Corporation, ticker NEM, surged nearly 4%, making it one of the top performers across all sectors this week. On the bond side, the 10-year Treasury yield rose modestly but remained range-bound, reflecting the Fed's steady hand. Bond investors appear to be pricing in a longer plateau before any rate cuts materialize. Emerging market equities showed early signs of rotation interest, particularly in Latin American energy exporters benefiting from higher crude prices. The iShares MSCI Emerging Markets ETF, ticker EEM, gained 1.4% on the week. Bottom line, geopolitical risk is back as a primary market driver, and the sectors that benefit from uncertainty, namely energy, defense, gold, and defensives, are the ones commanding institutional attention right now. Position accordingly next week: energy for momentum, defensives for protection. Watch Iran headlines, Fed speaker schedules, and the 10-year yield as your three key macro signals for the week of March 23rd. If crude holds above $85 and yields stabilize, the risk on trade in energy and select tech could extend. If uncertainty deepens, gold and defensives will continue to absorb capital flows. Stay informed and invest smarter. If this breakdown gave you clarity heading into next week, hit that like button and subscribe so you never miss a recap. Turn on notifications for next Friday's short and Saturday morning's full recap. We want to hear from you. What sector are you watching most closely heading into March 23rd? Drop it in the comments below. See you next week.